Good Sunday morning, option traders. This is Sam Trader Geek with your Sunday option preview review for the week. It's August 3rd, 2025. Hope you're having a great weekend. And we're going to start off with the major markets for Friday, which didn't have a really good day. Not a good time to start August, but we knew something was coming, and we saw that the VIX was up about 21, almost 22% on the day, backing off. I think it got close to 22. Gold rebounding about 2% on that worse than expected jobs report. TLT bonds gained 1%. Kind of a timely roll on our TLT bull puts. And then aggregate bonds up about 0.5%, but taking it on the chin, Magnificent Seven, as Amazon and Apple disappointed in terms of stock performance. Apple wasn't too bad. Amazon wasn't bad at all, but kind of gone with the day. Bitcoin losing about 3%. Microcaps losing 2%, and the small caps down 2%, as well as the Qs down 2%. So overall, you can call it a 2% down day. Total market index down 1.66, SPY up, SPY down 1.6%. And even the mid caps were down about 1.48%, with the dollar losing a little bit. If we look at the week, micro caps took it on the chin. So the smaller they were, the harder they fell. The Russell 2000 down 4%, mid caps 3.5%. So you can see as we go up in terms of capitalization size, performance is a little bit better. But Bitcoin losing about 3.25% on the week, and the larger cap Dow Jones Industrial 30, the DIA, down 3%. Total market index 2.5%, and of course the big winner on the week was the VIX, gaining about 36.5%, taking us from that low right below 15 up to a 20. So that low volatility did not last very long. And just so you know, the long-term average since inception on the VIX is about 19.5. So we're right around average of where the VIX has been for its full history. TLT gained about 1.6% on the week, and the dollar trudged up about 1.4%. If we look at the month of July here, strictly the month of July, and I'm going to show you some other charts since we're at the month end. Bitcoin performed the best, up 8%. Magnificent Seven, even though they gave back some on Friday, this is up 5.62%. Dollar bouncing about 4%, and the Q's up 2.42%. At TLT, for the month, lost $1.50, or I should say 1.51%. Aggregate bonds about 0.58%. On the quarter, which is essentially the month, no point in belaboring that. Let's look at the year to date through Friday. Gold is still in the lead, 28%. Bitcoin right behind, 20%, and the VIX up 17%. So Qs and SPY lagging gold and Bitcoin for the year, still only up single digits. And he says only, but this is pretty good performance for a year, let alone the first 7 months of the year. Vanguard total market index up 5.5%. The dollar losing about 6.3%, and the small caps still underwater for the year, as are the micro caps and the mid caps. So if you're in mid caps this year, you basically have done nothing, and the TLT up about 0.5%. Looking at the sectors on Friday, with the exception of the defensive sectors, which caught a bounce, and you would have thought they would have caught a better bounce than this if this something more nefarious was going on. XLV up 0.5%. Staples up barely 0.5%. XLV being the healthcare, by the way, and then XLU being the utilities, up 0.15%. But consumer discretionary on the back of Amazon and Tesla down 2.41%. Tech, of course, was down 2.16, and the transport's down 3%. Energy not catching a break this week, down 1.86%. Although this is just Friday, and you'll see XLF down 1.85%. So nothing except the defensive sectors were spared. And if we take a look at the week, you can see lots of red. The only positive sector on the week was the utilities, up 1.5%, with metals and mining really taking it on the chin, down 6.69, and so were the transports, UPS, FedEx, Expeditors, all getting hit, in addition to Uber, which I believe reports next week in the transports. Materials down 6%. Retailer stocks 4.79%, and you can see here that XLV, the healthcare, was down about 4%. So not a good week for any of the sectors. If we look at the month of July, metals and mining was the best, and utilities followed up almost 5% on the week, on the month. And then healthcare, basically the worst by far of any of the sectors on a monthly basis. And XLP stables down 1.5%, and communications, which primarily includes Google and Meta and Disney, and that's down 1%. So some of the stuff right in the middle. And then if we look at all the quarterly basis, again, that's telling you what happened for the month of July, because that's essentially how far we are in the year. So if we look at the sectors on a year-to-date basis, metals and mining up 27.59, and the closest sector are the industrials at 13.65, with the utilities up 13.36, and the tech up 10.56. So three different sectors leading tech, and then healthcare still cannot heal thyself, along with consumer discretionary, and XRT, the retailers, not doing too well. Still, on a year-to-date basis, the staples are up 2%, but stocks like Procter and Gamble, Clorox, Kimberly-Clark, and Colgate-Palmolive, those are the core staples that you see really getting hit this year, and probably on some of the tariff concerns. We look at the Mag 7. And this is just for the week. Amazon faring the worst, and Apple, which opened up on Friday and reversed, down 5%. Tesla down 4%. Google down 2%. And Meta, on that earnings blowout, up 5%, and Microsoft also on an earnings up 2%, though both of them gave back some of that earnings pop, as might be expected on a day like we had on Friday. But for the week, NVIDIA kind of broke even. Quarterly basis, this is just basically July plus 1 day. NVIDIA leading the way, Google 7.08%, Microsoft, and the worst on a quarter-to-date basis is Tesla, and now Amazon is in the red. But on a year-to-date basis, NVIDIA still leading again, Meta second place, and Microsoft in third place. Google just flat, but look at Tesla down 25% on a year-to-date basis, and Apple down 19%. Amazon flipping into the red after earnings. So that's kind of the big picture. I want to show you some other charts really quickly. And these charts are via the Kirk report. And the way these charts differ, and the reason I present some of these and show you some of these, and is to know exactly where the strength is, because strength begets strength. And as we saw with a stock like Baxter, trying to bottom fish does not always work out. Sometimes you catch a good run on a counter trend trade, but I'm starting to shy more and more away from these and favor the strength. And so if you focus on what's been strong on a monthly, quarterly, year to date, you'll know where to cast your reel in terms of stocks, because those that are doing well year to date are going to probably continue to do well, and those are not doing so well are not going to do so well. That doesn't mean we can't take a shot here and there on an underperforming sector, group, industry, or stock. But the odds are against that in this type of momentum driven environment. So what you're looking here is at the month of July, quarter to date, which is essentially the same, and then year to date. So I won't rehash all of these, but the difference between the charts I just showed you and this one is that the weekly here does not include Friday. So this is without Friday. And you can see here, we've added kind of equal weight sectors. Again, this is courtesy of the Kirk report. Now, this chart is from Bespoke, and it kind of highlights something. And again, pause the video if you want to kind of ponder this a little bit, but you can see that for the month of July, Bitcoin was up 8.35%, and oil was the best, up 8.86%. And then contrast that with natural gas, another energy play, and you see that that was one of the worst, down 11.06%, along with Brazil down 8%, India down 5.46%. Those were the worst. So Bitcoin and oil outperformers by a pretty good margin for the month of July. And then you can kind of ponder some of the year to date. Look at us in small cap value. This has long been touted as, you know, a cornerstone of anyone's long-term portfolio, and small cap and small cap value just have not performed, down 6.3%. Healthcare, look at that, down 4.3%. But if you're industrials, you're up 16%. And want to point out one other thing. I don't know if we see it in this chart. I don't see the equal weight. So look at August 1st on the RSP, the equal weight, something I noticed, down 1.53% on Friday. And the cap weighted SPY was down 1.37. So you would have thought that given the outperformance, look at year to date on the SPY, up 8.5%, yet the equal weight is only up 5.71%. Look at the equal weight, weaker than the cap weighted SPY. So that seemed kind of weird to me, because I would have expected the equal weight to outperform the cap weighted, at least on a down day, given the outperformance, you know, the boost of those big stocks give to the SPY. Look at it. Look at another one here. QQQ down 1.5%. And then do we have the equal weight? Yeah, here's the equal weight. QQQE, sorry, down 1.6%. Again, here we see that the equal weight outperformed on the downside the cap weighted QQQ. And even though the cap weighted QQQ was up 10.8%, the QQQE is 1% underperformer on the year-to-date basis. It kind of led to the downside. So make of that what you will, but that's not what I would have expected to see. All right, moving on. Here are industries. Again, this is the week, but it does not include Friday. That way this chart can show the month through July 31st and the quarter year to date. So, but again, the month and the quarter are identical, and then you can see the year to date by industry. And if you want to see the top 10 winners, just including stocks, this is courtesy of the Kirk report. You can pause the video and kind of take this in. Again, look for the stuff that's really performing on a weekly, monthly, quarterly, that tends to continue to perform. This one's excluding leverage ETF, and here's everything in here. And then on the loser side, you can see obviously a lot of red here, and kind of put this in here for your own edification if you want to see where the areas where things are doing bad. And we know that copper took it on the chin last week pretty badly. And I'm not exactly sure what's in this Destiny Tech 1100, but it's certainly doing pretty badly year to date. So I ought to look at that a little bit more because I'm not sure what's going on there. Netherlands market. The Netherlands market is primarily ASML, and that stock hasn't been performing for the past couple of months. That's way too big. Let me bring that down. There we go. Yeah, this is the same thing we showed, except it's not including Friday's action. So let's take a look at what we like to do in terms of a weekly basis, and something I always show in the webinar is looking at the TriPaine, the daily, weekly, and monthly chart. And when you look at the daily chart, you could see the SPX closed under the 21 EMA, a pretty bad day after peaking on Thursday morning at 64.27. You know, we've lost almost 200 being oversold. So I think we're getting closer to the end of this decline than most than more stronger decline, but we shall see. 6,200 should be some form of support. That's the lower Bollinger Band. 6129 being the 50-day moving average. But I think around 6,200 to 6,150 is where the market will find its footing. We definitely don't want to see it break the 6,100 level, because that's where kind of the breakout is from the February highs. Let's take you there. So taking them in order, here's the weekly chart. You can see MACD is still solid, but RSI turning down a little bit to the 59 level. Kind of a bearish engulfing candle here. But you know, this is kind of the first week in a long time where we've had an ugly looking red candle. And frankly, to have a day down like we did on Friday, up down close to 2%, but not quite there, maybe 1.75%. Yeah, we were overdue. Look at this run here. Look at this run on a daily basis. And here we are on the monthly. We're starting the month kind of an inside month, which is not surprising given that we have a wide range bar for July, which had a low at 61.78 and a high at 64.27. So unless we break 61.78, so to speak, we're still an inside bar, and we will continue one-time framing. So it's going to be really important that we hold the 61.78 level, which is not too far away. I mean, that's basically we'll call it 50 points away from where we are right now. Maybe 60 points actually, if I do my math correctly. Then we look at the MACD. MACD has gone flat, so it could flip over, but this is a monthly chart. It's going to take a while. And same with the weekly. We're a good ways away from that flipping, and we've got positive histograms here. And you can see here we got just to the overbought level on the monthly and turned down. So none of this is really ominous at this point. Again, I would expect that 6,200 would see a bounce, and I definitely want to see 6150 hold. So if we go back, um, what to the February highs, that high was 6147, and that's where we turned down from. And once we got above there in July, we want to see that turn into support. We don't want that breakout to be a fake out and break under the 6150. So that's a critical level to monitor, and see what happens. I think that if we break the 6147, then we have potential to come in a lot more than we already have. But so far, um, the market surprises have been to the upside. Okay, so let's take a look at the NASDAQ. Doesn't look too much different. A peak on Friday, and fall through on a peak on Thursday, I should say, and a fall through on Friday. We were down 1.96%. Again, here we are at the 48 RSI. We saw this on Thursday in the live webinar that the MACD had already flipped negative. There's another bearish engulfing on the weekly after making a new high. Again, well deserved for us to pull back, and we can see the monthly still looking good, an inside month, and MACD is still positive, but we are getting out of the overbought area on the monthly. So we could have more room. Right here is the lower Bollinger Band at 22,563, a couple hundred points. That could be just Monday. And then we have the 50-day down at 22,307. Again, we took out the 21 EMA here. What doesn't look as good is the Russell 2000, and this one really never made as much progress as the two, main index, the NDX and the SPX. And you can see by indicators here, everything is red on the daily. And out of 1, 2, 3, 4, 5, 6, 7, 6 out of the last 7 days have been red on the small caps, and they just can't seem to get out of their own way, and never made another new all-time high like the rest of the indices did. So we peaked over here on July 24th, July 23rd, and we've been falling ever since. MACD is negative. This one's closer to the oversold level at 41, oversold level being 30. You can see on the weekly, the MACD or the RSI is at the neutral, but we are flipping, rolling over on the fast line on the MACD, and this one never even got above last week's high before rolling over. So small caps not really doing it. And then we have the monthly candle. Look at that big topping tail on the July candle in terms of the July monthly candle. And then we have so far we have undercut or stopped one time framing. One time framing means that the low of any particular candle violates the low of the prior one, and this is after 1, 2, 3 months of one time framing higher. We finally stopped one time framing higher. This has not happened on the NDX or the SPX, and that can be a pause, or it could be an indication of something worse. It's still soon to tell. But this MACD never even crossed up where the fast line crosses up over the slow line. So we've got some work to do here, and we're still at the neutral range on the MACD in the middle. So as long as we're on this chart, let's take a look at the VIX. And really one that matters the most to me is the daily chart, really. And you can see that we got as high as 2190, not quite to 2022. That was good for about a 20% increase in the VIX. Actually, that might be more than that. So we closed Thursday at 1672. Yeah, I guess that's about a 25% increase in the VIX on Friday. So we backed off a little bit, but there's still more room for this to head up. MACD fast line over the slow line, and we're not quite to the overbought level on the VIX, and we did well with the VIX calls that we had on. We took a 50% and 100% profits on a couple of scale outs on it, so that's kind of nice. But there's more room for this to move up, and if I there we go, back to the 3 pane. Look at this weekly candle, taking out 1, 2, 3, 4 weeks on the upside. So that's not insignificant. And obviously we took out on the monthly side the high of the July candle. So could be more room to go up. There's plenty of room for this, for the RSI to get stronger. So we'll see what happens. And since we're talking about the VIX, let's take a look at what the options look like. And if you recall, we are in the 20s and a little bit wide after hours. So our 20 VIX calls are at $1.94. So they're still close to the double. And if you're still in these, I would definitely set my stop to about under $1.50. And oddly enough, the low on Friday was $1.50 for these options. So hopefully nobody got stopped out on that, but $1.50 is where I would put my stop on the rest of these. We could see some early action on Monday to the downside, or maybe they come back and buy them after a disappointing Friday and no news over the weekend. We shall see. But since we closed at 20.38, let's call it 20 and a half. And if we go out $1 to the 21 and a half, and we bought a call, it means we're still bearish. That's going to run us about $1.54. And then if we go out to the puts and we want to buy those, that's going to run us about $1.77 for the mid. So you see what's happening here is that when we were looking at this last week on Sunday, the calls were priced at about 10 to 15 times more than the puts. And now they're kind of neutralized. The puts and the calls are about the same price. And actually, it's skewed towards the puts, which means a lot of the energy that was built up based on what we saw with the calls versus the puts is now leaning back in favor of the puts. So this doesn't tell us anything because they're kind of equal in price, and anything can happen from here. This could continue to favor the puts, which means that the bears are running out of ammunition, or things could reaccelerate on this side. But at this point, the pricing of the VIX calls versus the puts is not providing any type of edge and telling us that this is a neutral signal. I wrote in the forum and on Telegram at the close on Friday. We always want to look at the options implied expected move for the next week. Last week it was about 92 points. This week we're up about 40 points to about 133 and a half points for this week. And as you'll see, we don't have a lot of economic data coming our way, but this is certainly a significant increase from last week. I guess that would be about 40%, a little over 40% increase. Maybe that's even a 50% increase. But in any case, for short-term options, definitely be a buyer, not a seller. Just because we had that sell-off on Friday doesn't mean it has to continue on Monday. Odds favor it continuing, but as we saw with the VIX pricing, there's no longer kind of an edge. A lot of that edge has been played out on Friday. So it's anyone's ball game come Monday morning, depending on what mood strikes them. But there was weak data, and the market may want to send a message to Powell that you were wrong not to cut on Wednesday, and you should start gearing up and talking more dovishly towards a September rate cut. And maybe that will happen, but in my opinion, I don't think a rate cut is warranted, at least not yet. Economic news for this coming week. Very light, nothing really that significant. You could see ISM on Tuesday, really nothing on Monday, just factory orders. But ISM purchasing managers index, kind of a reddish event. Nothing on really happening on Wednesday, 10-year bond auction. Unemployment on Thursday as usual, and really nothing for the rest of the week. So it is a very mild week in terms of economic data. And we might have seen the peak in terms of earnings announcement with the Mag 7. I think they've all reported now. And so we're still in the heart of earnings season. A lot of big names reporting next week. We've got like Wayfair before the open on Monday, Palantir after the close. That's a biggie. We have I think we've closed our put spread on there, so we're looking for something else. Vertex Pharmaceuticals, Pfizer before the open on Tuesday, DuPont, Eaton, Snap, Arista Networks, Supermicro, Uber on Wednesday, and McDonald's on Wednesday as well, DraftKings, Fortinet, and Lilly on Thursday before the open, Twilio after the close on Thursday, Trade Desk. And then on Friday, we have a bunch. So earnings, another big week, lots of reporters, but we're kind of winding down in terms of importance of these companies to the overall market. And we've seen the biggie ones have reported so far. Anyway, let's take a look at our open trades, and we don't have a lot of them, and get you out of here. Let's see. Yeah, here we go. And put this on the chart. And let's take a look at Amazon's. So we were a little early on Amazon. Looked like it was holding up really well, but ended up closing below the 50-day. So we took out on Friday a 220, 235 call spread for $5.75. Kind of put some of that money to work that Dan sold the 215, 200 put spread. But unfortunately, with the market weakness, Amazon couldn't get much above 220. Maybe I should have been a little bit more patient with this one, but it looked like it was showing some signs of strength, but things weakened everywhere in the market. We're down about 19%. We're going to take a 50% hit on this if it gets there. But I have a feeling that if we're going to see some strength this week, and we might get bailed out a little bit on this one, but have plenty of time. 47 days to expiration. It's unfortunate that's below the 50-day. Down here at 209, that's the 200-day. Hopefully it doesn't get down there, and if it does, we'll probably get stopped out. And I may modify the stop a little bit, but look at that volume on Friday, 122 million shares on Amazon after trading 104 million on Thursday. So MACD has flipped negative, but we are inching closer to the oversold level of 30 on the RSI. So Amazon, brand new trade. Let's see what happens there. Costco, again, part of this consumer staples group. And you can see here that this red line here is the top of the options implied expected move for Costco last week. And also right at the 50-day, so it kind of got stuck there, but it's nice to see this bounce away from our short strike, the 925, 900 put spread. And now we're up about 50%. And I was tempted to move it on Friday, but I thought, you know what, it's still worth about half of what we sold it for, so let's stick with it. And we're not quite at our first profit target with this one, so it's nice to see this bouncing. And I don't think this one is gonna fall back to 925 unless we see strength return in a hurry to the risk on tech sector and what have you. CrowdStrike, not liking what it's doing, but at least it bounced off the lows on Friday, so up about $7 from where it was, $8 off the lows. We have a 430, 400 put spread which we sold for 375. So we are about $17, a little less than $17 away from the short strike, which is nice and gives us a little bit of cushion. This one doesn't have earnings until August 27th, so we have plenty of time. And this was positioned to expire before earnings, so this could run out. And you should have already taken a while ago partial profits at $1.65 if you have a bunch of them, but not terribly worried about this one. But again, it'll be nice to see this one start to show some strength. 100 days at 430, 439, 433, but I don't think that has been significant. 200 days down there at 396, but CrowdStrike really getting hit since it hit a peak of 517 back right before the 4th of July. Rigetti, another one of these, it's going to have earnings, I believe, this week. No, 8/12, that's the following week. So we can see here, also held the options implied expected move here. Little doji, not quite a hammer, but MACD is negative. RSI is heading to the neutral 50 level, or it has gotten there. We're down about 21% on this. I've got a stop set at 90 cents, which is basically a 50% level. Has not looked good since we put it on, and we get strength sold, but this whole quantum computing space tends to trade in a cohort. I like Rigetti, but we may, if we see more tech weakness, we may see this one hit our stop, or I may just cut it loose before then, given what's happening in the market overall. The SPY, we have a 620, 610 bearish put spread that expires on August 15th. And that was financed by selling a 515 put in October. And so far, it hasn't done anything for us. And what we did on Friday is I recommended the sale of partial on the 620, 610 put spreads in August. And that brought us in about 271. We bought these for about a nickel, keeping that 515 put naked. We've done that before. And so this is finally coming into range with the SPY at 621. We're almost right at the money on these, and kind of wish that I might have closed that 515 put early on while we had the chance. It was still worth like about $1.75 when I looked at it. Now it's worth about $2.66. So we'll do the two-step on this one, and this is providing a bit of a hedge. And given that the short put strike in October is all the way at 515, we have a lot of cushion, $95 of cushion, and not likely to get down there. So if I go back and look at this October 15th, 515 put, it's a 7 delta, so it has a 7% chance of being in the money. And to me, that's not a worrisome thing. And the only reason to close it out is that you don't have the margin to hold it any further. TLT, like I mentioned earlier, having a really good day. We rolled the August 85 puts out to September, and our timing was good. We're up 28%. We did it right before this pop, which is nice. So we took something that was down to about 28 cents, sold a 98-cent put, collected about 70 cents. And yeah, sometimes it pays to get lucky when on your timing. So TLT bouncing back. Don't like the reason it's bouncing back, weak jobs number, but one jobs numbers does not derail the whole economy. We still have another one coming up before the September FOMC meeting. VIX, we talked about that a little bit. We took two profit targets on this one at $1.63 and one at 212. And I've set the next profit target at a triple at $3.15. So gonna set the stop at $1.50 if I haven't put it in here. Think of that. So yeah, VIX is working out, and now that the market is showing us some opportunities and pullbacks, then the field is now open for us to kind of go shopping again. I didn't like the day after day all-time highs. Well, I like the all-time highs, but I don't want to put in a lot of new trades when the indices were going up, but the vast majority of stocks were not. So now we can look at some of the winners, especially the ones that I've reported, and see where we can get into them. All right, so to kind of wrap things up, you know, one day does not make for a bear market. And so while there may be more downside ahead, I think 6150 is going to be key. Are we going to hold that? And that's only about 88 points. I think 6200 we'll see a bounce. That's 38 points from here. But, you know, protect your profits. And if we've learned nothing else from this market since the April lows, is that it is pretty resilient. It can do things that we're not expecting, and nobody really expected us to get above these February highs, and we did. So we want to see it hold the 6150 level. So don't count this market out. Watch the price action and then decide what you're going to do, and follow your stops, whether they're on options or stocks, and if they're for short-term trades and or swing trades, manage your risk, and you know, just try not to have a bias. It's very difficult, but that will save you money. And you know, if it's not working, toss it, and you can always get back in. I know it's easier said than done, but that's what I do, and it took me a long time to get there. So I hope you have a great rest of your weekend. I hope you find this useful. If you have any comments for me, at Trader Geek on Twitter, Trader Geek Sam in the forum, and I appreciate you watching and welcome any feedback you have. Take care and enjoy the rest of your Sunday. I'll see you tomorrow. Bye-bye.